Welcome back to Iraqi Dinar Alert, your go-to source for the latest updates. Today, we're diving deep into what investors absolutely must know about the Iraqi dinar. For years, the dinar has been a hot topic among speculative investors, fueled by rumors of revaluation and hopes of massive economic reform. From online forums to YouTube channels like this one, the buzz is constant. But when we look at the Iraqi dinar news today, it's crucial to separate the hard facts from the hype. We need to understand the real economic picture of Iraq. So, in this video, we'll break down the current situation of the dinar, highlight key developments you should be watching, and discuss the real risks involved in holding or buying this currency. First, let's understand the dinar's current position. The Iraqi dinar, or IQD, is the official currency of Iraq, issued by the Central Bank of Iraq, also known as the CBI. Right now, the dinar trades at a very low value compared to major global currencies like the US dollar or the euro. This low value is exactly why so many speculative investors believe a future revaluation could lead to huge returns. But here's the reality check. A currency's value is tied directly to economic fundamentals, not rumors on the internet. Iraq's economy is still considered a developing one, and it's heavily, and I mean heavily, dependent on oil exports. While all that oil revenue provides a strong income stream, it also makes the economy incredibly vulnerable to the ups and downs of global oil prices. So, while the potential seems big, the foundation is still being built, and it's a foundation that rests almost entirely on one commodity. Let's talk about the recent economic developments in Iraq. The news today often highlights things like economic reforms, government stability, and banking modernization. And these are the factors that truly shape investor confidence. The Iraqi government has repeatedly stated its goals: strengthening financial transparency, cracking down on corruption, improving how they collect taxes, and modernizing the entire banking system. At the same time, the Central Bank of Iraq has been working hard on currency stability, managing foreign reserves, and pushing for digital banking initiatives. Now, all these steps are positive signs, no doubt about it. But they do not, I repeat, do not automatically mean a sudden or dramatic jump in the dinar's value. For investors, the key takeaway here is simple. Progress is gradual, not instant. It's a marathon, not a sprint. These are long-term plays that take years, not weeks, to bear fruit. Now for the big one, the Iraqi dinar revaluation, or RV. Is it a myth, or is it reality? This is probably the most common topic you'll find in any discussion about the Iraqi dinar today. Countless online sources will tell you that a major revaluation is imminent, that it's just around the corner, or that it's practically guaranteed. In reality, a currency revaluation is an incredibly complex economic process that usually happens slowly, over a very long period. A sharp overnight revaluation like the one many hope for would require a perfect storm of positive conditions. We're talking about strong and diversified economic growth, meaning less reliance on oil. It would need unwavering political stability, consistently low inflation, and massive international confidence in Iraq's entire financial system. While Iraq has certainly made progress in some of these areas, it still faces significant challenges. There are ongoing political disagreements, major gaps in infrastructure, and that ever-present reliance on oil revenues. So, investors must be extremely cautious of exaggerated claims that promise overnight wealth. If it sounds too good to be true, it almost always is. This brings us to the role of the Central Bank of Iraq. The CBI plays the most critical role in managing the dinar's value. Its main goals are clear: maintaining price stability, controlling inflation, managing the country's foreign currency reserves, and regulating all the banks and financial institutions within Iraq. The CBI often intervenes in the currency market to prevent extreme fluctuations. What this means is that the dinar is highly unlikely to experience sudden dramatic changes without a very strong economic reason to do so. For you, the investor, monitoring official statements from the CBI is far, far more important than trusting unofficial rumors circulating on social media or in chat forums. Go to the source. The CBI's website and official press releases are your best friends in this journey. Everything else is just noise. Let's look closer at oil prices and their impact on the dinar. As we've established, oil is the backbone of Iraq's economy. When oil prices are strong, government revenue goes up. This supports the national budget and builds up foreign reserves, which can have a positive long-term effect on the dinar's stability. It gives the government more room to maneuver and invest. However, this dependence on oil also creates significant risk. A sharp drop in oil prices can put immense pressure on government spending and seriously weaken confidence in the currency. Investors have to understand that the Iraqi dinar AS future is very closely tied to the volatile global energy markets. What happens in Riyadh, Houston, or Beijing directly affects the value of what S in your wallet if you come holding dinar. So, what are the risks investors must consider? And this is the part everyone needs to hear. Investing in the Iraqi dinar carries significant risks, especially for small retail investors. First up is liquidity risk. The dinar is not widely traded on international forex markets. This makes it very difficult to exchange it quickly at a favorable rate. You might buy it easily, but selling it can be a whole other story. Then you have the rampant speculation and scams. The dinar market has unfortunately attracted a lot of scams promising guaranteed returns. Let me be crystal clear. No legitimate investment can ever guarantee profits. Anyone who tells you otherwise is trying to sell you something, and it's not a sound investment. Don't forget political instability. Any sudden changes in government or a flare-up of regional tensions can have an immediate negative impact on investor confidence and the economy. Finally, there's regulatory uncertainty. Currency regulations can and do change, affecting how and where dinars can be legally exchanged. Smart investors always do their homework, research thoroughly, and avoid making emotional decisions based on hype. So, what should smart investors focus on instead? Instead of chasing rumors, informed investors focus on verified, tangible indicators. Things like official announcements from the Central Bank of Iraq. Look at Iraq's GDP growth and its budget performance. Keep an eye on inflation and interest rate trends. Follow the progress of banking and financial reforms. And pay attention to international relations and trade agreements. Long-term, sustainable economic improvement matters infinitely more than short-term speculation. Let's wrap this up with some final thoughts. Is the Iraqi dinar worth watching? Absolutely. The dinar remains a fascinating case study for speculative investors, but it is not a guaranteed lottery ticket to wealth. The Iraqi dinar news today shows a country making gradual economic progress, not one on the verge of a sudden miraculous transformation. Any meaningful change in the currency's value is likely to be slow and will be directly tied to real, measurable economic growth. So, my advice is to approach the dinar with realistic expectations, a commitment to strong research, and a healthy dose of caution. Understanding the risks is just as important, if not more so, than fantasizing about the potential rewards. Stay informed, stay critical, and make decisions based on facts, not fiction. Thank you so much for watching. If you found this breakdown helpful, please hit that like button, and be sure to subscribe to Iraqi Dinar Alert for more updates and in-depth analysis. We'll see you in the next video.